welcome to this week's webinar with me, David Jones, and Aondo Markets. This is a webinar we do every Wednesday lunchtime at 12:30. Normally runs for half an hour, and it splits down into a couple of parts. We'll take a look at what's been going on in the markets over the last week, what to look out for in the days ahead, where the opportunities might be, and also we'll spend a bit of time every week talking about a different bit of strategy. And this week we're going to go back, I think, to what is always a popular one, trying to pick turning points using oscillators. So we'll spend a bit of time on that today. Let me just put up the risk warning actually while I'm talking away. Let's make sure that's there. Yeah. If you're watching the recording, it was held live on Wednesday, May the 10th. It's been, I think the week got off to a bit of a busy start because we saw that the French election, the final round of the French presidential election on Sunday, and quite a bit of relief from markets. As a result there, we saw stock markets gap higher again on Sunday night, although some of that has cooled off. I think we've got an interesting situation with US stock markets at the moment, so we'll take a look at that. And also we've seen some big moves in currencies, the likes of the euro, obviously, although again, that's sold off the last couple of days, but I think again, we've got potentially another interesting setup there. So let's flip over to the charts and just take a look. Here we go. I'm having a bit of an issue with my screens today. I don't know what's going on with them. Here we go. So hopefully, what you can see there, this is Trade Hub. So this is Aondo's trading platform. Oh, what's that mean? I've got no idea what that means. Okay. So what we're looking at, this is euro dollar. So first of all, let's talk a bit about this strategy. I think everybody tries to pick, turn out, that's gold, that's not euro dollar. Let's flip it over to euro dollar. I think clearly people do like to try and pick turning points in the market because it helps them identify a new trend, get into an existing trend, and also in terms of risk versus reward, it offers up good trades. If you can pick, if we go back and use our Harry hindsight trading, if we'd have been buying into the euro back in April around about 106.20 after it made this low, we can have what is a relatively tight stop loss and potential for a profit that's a multiple of that stop loss, and that's the sort of thing we should be aiming for. I've mentioned, I think in the past, work that a broker did a few years ago. I think it is on my website, where they looked at millions of trades that clients did, and clients were actually reasonably okay at picking market direction, slightly better than a flip of a coin. So just slightly more than 50%, I think, on average in terms of getting the direction right. But the big stumbling block was the fact that the losses were almost double the size of the profits. So if when you're right, you're making 100 quid, but when you're wrong, you're losing 180, 190 quid, your account is only going to go one way. So what we are looking for are trades that are a multiple, hopefully, of the amount of risk that we're willing to take. So a popular way of looking at this is using oscillators. So what I've got up here is a 10-day RSI. Now, there are probably hundreds of different oscillators you can use. If you've attended any of these webinars in the past, I'm not a massive fan of the squiggly lines at the bottom of charts, but I think the RSI definitely does have its usage. It's the oscillator that's been around the longest. It's a relative strength index, and it's not the relative strength of the euro versus the yen or versus gold or versus oil. It's how strong is a market now compared to how it has been recently. So a 10-day RSI measures, how strong is the market compared to how it's been over the last 10 days. And we get these extremes, when the oscillator dips below 30%, the market is technically said to be oversold. When the oscillator pushes above, like up here, up above the 70% mark, the market is said to be overbought, and it's all a way of trying to gauge the temperature in the market. So if we walk back to some of the more recent signals, so we see here, this is euro dollar, this is a daily chart we're looking at. We're going to look at this in a bit more depth in a second, but just to get a feel for how this works. The market, the RSI went overbought sort of the last week of April. The euro did push higher, but has since rolled over. It looked like it dipped very briefly into oversold in April down here, and that did do a pretty good job of calling the low. Same here on the top, not a bad job at all back in March of calling another sort of intermediate high for the euro. And then we've got to go back to here where it was really heavy oversold. And I think this is a good example because this does illustrate the drawback of the RSI, where the market had been falling. And the drawback, I think, of any oscillator, if we're looking to call turning points, the market had been dropping quite sharply, for a good week there. And not surprisingly, the RSI got dragged into the oversold zone. But if you'd been buying then, and just sort of buying and hoping, you'd have got absolutely clobbered because the market sold off even more heavily and the RSI went more and more oversold. So I think it's a cautionary tale. It's a great example, this, a cautionary tale of don't use these blindly. I'd always use them in conjunction with the overall trend and some big levels in the market. Don't think it's some sort of a holy grail system. And something I've talked about before, arguably a more reliable use of this RSI is this idea of divergence, and that's when the market does one thing, but our RSI or our stochastic, wherever it is we're using, does something else. So here we have, for example, 25th of April, euro dollar hits a high around about 109.40, RSI goes overboard. So if we were aggressive, we might have been a seller up here with a stop loss above that most recent high. The market did sell off for a couple of days, but then you see pushed higher still. But what's going on with the RSI? The RSI has made a lower high. So this little setup here, that's known as bearish divergence. So it's a suggestion that even though the market still looks to be strong, it's not as strong as it was a few days ago. So it can be a suggestion that maybe the strength is starting to run out of steam. And this sort of setup, it doesn't happen that often. I'm trying to find another one here on the chart. That's not bullish divergence because the market, the RSI, didn't move out of the oversold. Let's scroll back a little bit. That is here. So this little pattern here is not as clear, I don't think, as the most recent one that we had on the highs, but where again euro dollar slips to a low, bounces, but then slips a little bit lower again. Our RSI makes a higher low. So this little setup here is known as bullish divergence, where it's diverging away from the price. And I'd say if you want to be sort of patient and wait for the absolute best of the setups using these sort of oscillators, then waiting for this bearish and bullish divergence setup is probably a cleaner and I'd say maybe more accurate way, a more reliable way, let's say, of using the RSI. So there are two different twists there. We can use it just if it goes into overbought or oversold, or we can wait and see if we get this divergence setup. So let's take a look at some markets and plonk the RSI on. I think the euro is an interesting one. There's been a lot of focus on the euro because of the whole Brexit thing for a start, but also because of these French presidential elections that we've had in recent weeks. And the net result is that on the 7th of May, the euro pushed out to its best levels since November last year. So we do have, and we have had, for much of this year, a very strong euro dollar, although of course the market has sold off the last few days. But if we flip this over to the hourly chart, I think we've got an interesting setup here on euro dollar. Let me just take this out. So this was the gap, although it's not shown as a gap. It was a gap on was it April the 23rd, that Sunday, of the first round of the French presidential elections. So it finished the prior week around about 107.20, then started trading around about 109. So we saw a good 150, 180 point move on that Sunday night after the first round of the elections. And I must admit, I thought that was a bit overdone. The market did sell off for a few hours, but did continue to build on this and pushed out, as we saw, May the 7th, out to its best level since November. Since then, euro dollar has dropped back, where are we, 101.80, 118. We dropped back about 150 points, but we're back to what has been pretty big support for euro dollar. So I think it's, if you want to be a buyer of the euro, I think it looks to be setting itself up sort of as we speak. Let's just plonk some support lines on here, and this goes back to setting up trades that have got potentially much more profit than we're risking. So after the first round of the French presidential election, we saw the euro sell off back to about 108.20, and then it pushed a bit higher, it sold off, and this 108.50 provided support. So we have this band here from 108.20 to 108.50 that has seen buyers come back in for euro dollar over the past couple of weeks or so, and the weakness that we've seen over the last few days has brought us back to this area. Coupled with that, going back to our using oscillators to pick turning points, we've got so now this is a 10 RSI, but because it's an hourly chart, what we're looking at, of course, is now a 10-hour RSI. So how strong is the market compared to how it's been over the previous 10 hours? So we had this downtrend in place. The market's pushed to a low, and you can see how the RSI has gone very oversold because the euro has just been dropping and dropping for the last few days. The euro blipped up yesterday. It's sort of yesterday afternoon, that looks like, or yesterday evening, actually, from 8 o'clock yesterday night, blipped up, rallied around about 30 to 40 points back up to 109, and has run out of steam again this morning during the European session. But what this has given us is this bullish divergence setup, so where the market has hit a low, pushed up, and pushed a little bit lower, but the RSI hits a low, gets dragged up by the market rally, sells off again, but does not go below its previous own lows. So you could say this is, from an RSI bullish divergence point of view, this is a perfect setup for euro dollar. So the trade would be, and clearly this isn't a recommendation, but if we were going to buy off this, we're going to buy, where is it now, 108.71 ish. So we'd be a buyer at 108.71. Me, for my stop loss, there's the ticket. So 108.71 is where we'd be buying. For me, on a stop loss, I would want it somewhere below these old lows. Let's just maximize that again. So I might have a stop. Let's say 108.20 to 108.50 is the zone of support. Let's say we go, I don't know, 108.10. So we're a buyer at 71 with a stop at 108.10. We've got a 61-point stop loss. Now, if we had a really bullish view on this market, and we think it's going to break out to fresh all-time high, not fresh all-time highs, fresh 6-month highs, again, maybe up to this sort of level, sort of 110.40. It's 170 points potential profit from where we are now, for a risk of about 60 points if our stop loss goes at 108.10. So we're risking 60 to make about 170. Now, for me, that is a half decent trade. Ideally, I'd be looking for potential profit of three times the risk. But for me, that's a pretty good trade down at these levels, because I know I've got a couple of support levels trying to stop any more weakness. I've got my RSI, the bullish divergence building up here, suggesting that we could be getting near to what is a short-term base, and I've got potentially a whole chunk of profit if the market rallies as I expect it to. So I think euro dollar is a really interesting one to watch based off what these levels have done. If we flip it over to a daily, with the trend, we're going with the trend. We're going with a bigger trend since December last year, and what I'm expecting is for the market to recover from here and push out and set fresh sort of 6-month highs. So I think euro dollar for me is a really interesting one to watch. I think that's maybe the more obvious trades at the moment. Okay, it's already a point in profit. What a brilliant bit of analysis that was. Let's see what happens. Another interesting one, which I must admit has pushed a bit further, quite a bit further than I thought it was, is dollar yen. So we've seen quite a bit of dollar strength this week. Let's flip this out to a daily chart. So dollar yen has come from about a month ago, just under a month ago, the 108 level, to trade briefly, I think yesterday, through 114. So we've seen a 600-point rally in dollar yen over the last month. And even though I'm not the biggest fan of trend lines, I've been watching this. If we let me just plonk this on here. If we go from here to here, there we go. It actually looks to have broken out over the last couple of days. I think I put something on Twitter earlier this week when it looked like it was hesitating by that trend line. It's pushed out, But look how overbought the RSI is. We have been much more overbought than this before. And again, there is a warning in here. Look, the RSI went overbought back on the 10th of November, and the move was only starting. So again, it suggests it can be dangerous just to follow the RSI blindly. We did have this bearish divergence set up again. It did eventually call the top. But I think euro-dollar is, not euro-dollar, dollar-yen is interesting. Yes, that trend is definitely still up, but I don't think I would be a buyer up here, and the problem for me is that zone there. So what's that? About 180 points higher than where we are now. We've got this major resistance. I suppose you could say, I mean, there's still plenty in there if you're the short-term trader. There's still plenty of potential profit on the table if you think the market is going to squeeze up and take a look at those highs from earlier this year. But let's just flip this over to an hourly chart. So for me, I'm just waiting to see if it's gonna run out of steam. But you can see, yeah, the strength of the trend. I don't think want to be a seller just yet, because it's only yesterday, last night, about 8-9 o'clock last night, that it made new highs for this up move. So for me, if I was trading dollar yen at the moment, I'd probably still be looking for opportunities to buy in. But the moves have been so big. My stop loss would be probably a good 100 or so points away from where we are now. But I think based on what's happening on that daily chart, dollar yen is an interesting one to keep an eye on up at these levels. Let's look at a few other markets. I'm going to do stock markets last today, because I think it's what some of the moves, they were maybe a bit confusing. I think some of the moves we've seen in US markets, just yesterday in US markets, we saw fresh intraday all-time highs for the Dow and the S&P, and then it sold off really sharply. So I think we've got an interesting couple of days in stock markets, but we'll come to those last. What we're going to look at now, again, are markets where I think there are opportunities, and it's the price of oil and gold. So let's take a look at oil first of all. We'll look at the US, the June contracts for oil. So this is a daily chart for oil. Now I must admit, I've been wrong-footed by oil this year, because we saw that recovery from where we were last February, around about $26 a barrel was the low for oil. And then for much of this year, we've seen the price of oil recover, and it ended last year actually punching out to fresh highs for the recovery trend, sort of up above $55 a barrel. But it's really struggled this year. You can see whenever it's sort of flipped up above 54, it hasn't lasted up there very long. So there hasn't been much conviction to be a buyer of oil and push it out to fresh all-time highs. And the big story for the last couple of weeks has been the decline in oil. We back in, when was that, April the 12th, it was trading just shy of $54 a barrel, and then end of last week, it traded down to 44. So we've seen nearly a 20% decline in the price of oil in a little over a month. So that's a really sharp sell-off. But it's brought us back to what has been massive support for oil in the past. So I think if, like me, you're a bit of an oil bull for this year, it looks like maybe, we're back to levels where the buyers have come back in. This sort of $42 to $43 a barrel has provided real support for the price of oil going back to the autumn of last year, so September, October of last year. So Friday saw it trade briefly below 44, and I'm just wondering, after we've seen this 20% decline in the last couple of the last month or so, do we see something of a base now being built for the price of oil? The RSI has not done a bad job in calling the turns. We were overbought up here, we were oversold down here in March, and then again slipped a bit lower, but the RSI was making higher lows, so we had a bit of bullish divergence there. Bullish divergence back there in November, so when it slipped down to 44, pushed a bit lower to 42 to that support, and again the RSI was making higher lows. So maybe there's no rush to be a buyer of oil just yet, but I think it's going to be really interesting. You can look at a daily chart. This is a daily chart that we're looking at here. Are we going to get a similar sort of setup to the one we've had on the last two sort of significant sell-offs for the price of oil, where the market sort of faffs around these levels a bit, maybe pushes a bit lower, maybe has a look at 43, but we set up this sort of bullish divergence? Actually, you could argue there is bullish divergence building up actually no, it needs to slip a little bit lower. Let's see what happens. But I think there's a reasonably good chance that the worst of the sell-off in oil is behind us, and maybe it's time to start building a base, and let's have another look at that sort of 54, 55 area. Let's have a quick look on the hourlies and see what that looks like. You can see it was almost like was it on the payrolls? No, it wasn't on the payrolls. In the early hours of the morning where it just crashed off. But again, it looks like almost exhaustion selling, you know, sort of the last ditch of selling before things get a bit more stable. So the hourly's a little bit choppy after the size of the sell-off we've seen. But for me, the big chart to watch on oil is going to be that daily chart. And let's see how things pan out. So we'll come back to it. Come back to it next week. We'll see if the price has slipped a little bit lower and set up bullish divergence. And we'll see again if this old support around about 42 holds. It's I suppose it's a similar sort of story in gold, but we've had, I think, a much clearer trend in gold. We were looking at this last week, so again, I'm quite bullish on gold for this year. Let's plonk our trend on. So our trend looks something like that on the price of gold. And a week ago, I was wondering whether this trend line was going to hold, and it clearly hasn't. But as with the price of oil, you know, we've got some big levels, not a million miles away. So first of all, that is sort of 1195, 1200 zone for the price of gold. You know, had been good support back in March this year. We're currently trading about what, $20, $30, $20, $25 above that level. So I think, you know, as with oil, this is another market to keep an eye on. You know, maybe we're going to get a bit more weakness back into here, but with the expectation of the 1200 area having a good chance of holding. And the last time we were down here again, we had a little bit of bullish divergence where the market slipped to a low, slipped lower still, but our RSI started making higher lows. We've got, you know, the RSI, not surprisingly, quite oversold down at these levels, and potentially a bit of bullish divergence building up here where the market, the RSI has hit a low, hit an extreme. The market moved just yesterday a bit lower, but our RSI hasn't quite tripped and pushed below that old low. So I think, like oil, there's maybe, you know, no rush to be piling in and buying it this afternoon, but looking at the dailies, I think it is interesting down at these levels. I don't know if we'll get any extra insight from the hourlies. Not much. I mean, that's, you know, looking at the hourlies, that's still a market that's weak. You know, we could plonk our trend line on this, hang on, you know, and it's going to look something like that. So I don't think there's any urgency, you know, to be a buyer. That downtrend's coming in around about the 1245 mark. We've got these old highs left in the sort of 1237 area here. So there's plenty of hurdles if we did see gold get a bit of a rally over the next couple of days. But I think, you know, for plenty of us who don't want to sit there and watch the market all day long, I think the daily chart is the one to watch. You know, so if we get maybe a bit of stability around about 1210, we've got an obvious level, these old lows, 1195, to put our stop loss beyond. So we have, I don't know, so we'll trade it with maybe a $20, $25 stop loss, but looking for maybe an $80 to $90 rally. You know, if we're going to continue, if this trend's going to resume, and we're going to push out through $1,300 an ounce, that's a good, you know, $80 away from where we are now. So having like a $20, $25 stop loss still makes sense to me on that in terms of a risk reward point of view. So I don't think it's not there yet, but I think this whole setup, you know, talking about using the RSI, using this oscillator to try and pick turning points is an interesting one. So that's gold and oil, a couple I think to keep an eye on. Now the last ones we're going to look at are US stock market. So I do have, you know, the S&P is a market that I trade, and I've got an options trade running on it at the moment that expires a week on Friday. And what I would like ideally is the market back down around about 2350. So I'd like the market to sell off a bit. But we've seen I was a bit worried going into the weekend that maybe on Sunday night, would we get the same sort of exuberant reaction from the market that we saw last time the French election came out? And we didn't. We did see it. We just flip it over to an hourly just to show you. We did see the market. That's the move, I think, on Sunday, isn't it? Yeah, we did see the market sort of poke out higher, but then spent much of the next day sort of giving up some of those overnight gains and pushing back more towards the highs from the week before. Let's have a look on the dailies. So I think it's a bit confused, I think, at the moment. It's we have pushed out, and yesterday we did see, we'll look at the Dow as well in a minute, but we did see on US stock markets fresh all-time highs set during the day. But we haven't seen, anywhere near the same sort of follow-through that we were getting post the Trump election win last year, when it broke out to all-time highs and everybody seemed to be scrambling on board to buy it, worried about missing the next move higher. So you could say it's a market, is it getting maybe a little bit tired up here, so around about 2402 is the high, the all-time high on the S&P, near enough, 2402, 2404, something like that. So I think it's interesting up here. The RSI is very overbought. Well, it's not very overbought. It's blipped into overbought end of last week and has come off a little bit since then. But with these strong trends, as we saw back here, the RSI can go overbought, but the market can still push higher for a few days. But I do think it's interesting because of the reaction. And if we look at yesterday, let's look at yesterday's trade, or maybe let's break this down to a much shorter term chart, so a 10-minute chart. Here we go. So that was it pushing out around about 3 o'clock UK time, 3 o'clock, 3:15 yesterday. Sets that fresh all-time high, but instead of getting the follow through, it just sells off. Spent the rest of the session selling off, broke to fresh lows for the day, and broke below Monday's low as well. So I think for me, going into today, I think it's going to be interesting. We found in the S&P for the short-term traders, we found support overnight, because it's a 24-hour market, of course, support overnight at 23.89, and we've blipped up to 23.93. So I'd say when the market opens in an hour and a half's time, that's going to be the first zone to watch. If it sells off, do we see those overnight lows hold? If it starts breaking, I think then we've got it. The big, it's not a million miles away, but the lows from May the 5th, where we did see the sort of 23.88 zone managed to hold the market up. So I've got a frog in my throat. So I think it's going to be an interesting session this afternoon. Again, it is the move that we saw on Sunday night, that spiky move there out of hours, and the in-hours official all-time high set yesterday. Is this like the last gasp for now, and we'll see the market sell off? So I think it's going to be really interesting to watch how these previous levels perform. Of course, if the market ramps its way up and breaks out to fresh all-time highs again, it just says that yesterday was a bit of a false move. So I think those are the big areas to watch for the short-term traders, sort of 23.88, the lows from last week, and those all-time highs around about 24.03 that we saw yesterday. But it does, it does look like it has lost. You can see quite a bit of momentum the US stock market over the last couple of months. It doesn't necessarily mean it's going to fall off a cliff, but maybe it's in a situation where it needs to maybe unwind some of the rally that we've seen. If you look at the Dow, of course, it's going to be a similar sort of picture. There we go. So the Dow actually it's set an official sort of in-hours all-time high, but it hasn't broken the sort of the 24 hours all-time high. And you can see just how tight the trade has been over recent days. So I'm sure there are going to be similar levels if we flip that over to a 10-minute chart. There we go. That's the big decline yesterday. So sets moves up to 21,050-ish, and then spent the rest of the day in reverse. We can see it just sliding down, and again has found some stability over those overnight highs. So some big levels to watch. I think the immediate level to watch is 20,883, and then back down to these levels around about 20,850 from May the 4th. So I think there's going to be some big levels to watch for the short-term traders. And we'll start wrapping things up there. But I think the immediate one is that euro-dollar, because we're sitting. Oh, it's just pulled up a little bit, not much. So we're sitting, on big support on euro-dollar. So I think that's, if we want something to trade over the next day or this afternoon, I think that's one to keep an eye on. US stock markets, to see how they react after setting fresh all-time highs yesterday, but backing off pretty sharply from them. And from a more relaxed point of view, the price of gold and oil, because we have pulled back to what have been big levels in the past. I'm going to start wrapping things up there. I'll just put my contact details up. Let me see if that's working. There we go. Oh no, that's not my contact details. That's my risk warning. If you have any questions, feel free to drop me an email. Oh, someone's said, could you do an order for a breakout? If so, what levels? I don't know what market that was to do with. Was it when we were talking about the euro? I'd say if you want to trade a breakout, you know, like the S&P is one. So we know the high is, let's say, 2404 on the S&P, and we want to be involved if the market is going to break 2404. Then we put a stop loss maybe a couple of points above. And the same on euro dollar. You know, if you thought, let's flip back to our euro dollar chart. Let's have a quick look. Here we go. So if you thought, you know, it's actually a good question, because, you know, I'm expecting these levels to hold, this sort of 108.20 to 108.50 area, and I think plenty of other people will be as well. So I'd say the flip side of that, of course, is if we saw it break 108.20, a lot of people are going to be wrong, and it'll be a surprise to a lot of people. So one strategy would be is to have stop loss below, a sell order below 108.20. So let's say the market goes to 108 or 107.95, have an order in to sell, you know, because you think, well, this is a big breakdown, and we might start filling that gap, you know, and trade all the way back to below 107. So you could have an order to sell below there. And even, you know, if you bought it here, an order to reverse the position, stop yourself out, take the loss, and reverse it to go short. So, because I do think this is a really important area of support to keep an eye on. Let's see what happens. My throat really is losing it now. So if you've got any questions, drop me an email, david@tradeafter.com. I do regular webinars on social trading with Aondo, and I've written a bit about social trading, my experience in following other traders, and you go to www.tradeafter.com to see that, and you can follow me on Twitter @JonesTheMarkets for market updates and stuff, interesting charts throughout the day. But it's just gone 1 o'clock. We'll wrap things up there. Thanks for coming along. The recording will be available a little bit later on, but there's plenty, I think, to be keeping an eye on, and it's going to be, I think, a really interesting session in the US stock market this afternoon after that sort of somewhat confusing move that we saw yesterday. But we'll wrap things up there. I hope you've enjoyed it, and have a good week, and we'll do it all again this time next week.